Hello and welcome to Unit 5, Intermediate Accounting 1. Here in Unit 5 we're back to two chapters, really focused in on our inventory and how we calculate a lot of different facets and elements of that inventory. A few of the topics that we'll be talking about this week to our inventory is, again, we're back to FIFO and LIFO and average. So we're looking at how the costs come in and how the costs go out. Remember, first in, first out. So the first items in are the first ones out. Then we also talk about our last in, first out. So the most recent purchases are those that are sold first. Remember, we're talking about, even though we're talking about inventory, we're talking about a cost flow assumption here. So we're talking about how the items go from inventory into cost of goods sold. So as we look at our first in, first out, the items that are the oldest are the first ones that were going to be considered sold in that inventory tracking cost flow assumption. And then when we're looking at our last in, first out, we're talking about the most recent items being sold first. We also have also in this chapter, in this unit, we'll be learning more about the average method. So at every transaction, we're updating that average every time we purchase more items. So that average cost per unit is going to get updated with every additional purchase. So again, one of the really important concepts to this is our layers of cost. So I always think about, layers of a chocolate cake. That's my stronghold here, is that you can think of all these different layers as different costs as they've come in. Same is true when we talk about the layering of costs in our LIFO or FIFO sections here. So we're talking about the different costs, the different price points, and we have all these different layers. And then when we sell those units, we're going to remove them according to those different layers of costs that we have accumulated. Also, we're talking about perpetual versus periodic inventory. So a perpetual system is going to use our inventory account as the account that all the purchases come in, the sales go out, and we can look at that almost as like a real-time data center of the transactions in and out, all related to that inventory under that perpetual method. When we're talking about our periodic inventory, that's where we're going to use accounts like purchases, cost of goods sold, those other accounts that are going to capture just those transactions. Purchases in one, cost of goods sold in another. All the purchases go into purchases. All the sales come out of cost of goods sold. And so there's not that one spot that has all the ins and outs like we have under the perpetual method. So again, that's the core of this week's unit. We're talking about our inventory. We're talking about keeping track of that inventory and how those costs come in and out depending on which cost flow assumption we're using, FIFO, LIFO, or average, as well as what system we're using as far as a periodic or a perpetual system. So again, feel free to reach out to me with any troubles you might have. I will respond as quickly as possible. Got a few questions about getting the homeworks, those assignments unlocked on the Connect. Actually got a few different emails from some of you regarding that. So I've taken care of that. So as we move forward, you should have those answers and that available just after the due date time. So again, if you run into any troubles or have any questions or just want to talk, please do reach out to me. Phone, email, text, whatever works best for you. Closing in on the making our turn here. So we've got Unit 5 content this week, Unit 6 content next week. After that, we're closing in on our final exam. So Our 7 weeks is coming close to being wrapped up, so please let me know what I can do to help you prepare for that final exam, as well as getting through these last couple of weeks of content. So have a great day. Take care. Thanks so much.